Thank everybody. I want to thank everybody for joining us. I'm here today with Steve Paiva. He's with EPM, and he's just going to talk to us a little about what products that he has available. And I'm really curious about this FICO score 500 minimum. So we'll definitely get into that. So, Steve, if you don't mind, can you introduce yourself and just tell us a little more about EPM?
Absolutely. So my name's Steve Paiva, EPM Wholesale. I'm the rep for all of Edge. I'm your one-stop shop, so to speak, for any questions, scenarios, uploading files, submission scenarios, etc. And I'm here as your point person throughout the entire process. So me personally, I've been at EPM for a couple of years. I've done this for 20. I'm the type of guy that will like to review files that you have questions on, or files that you're not certain are going to work or not. I'd like to review those, especially on the manuals. I do a ton of those. I can't do them all, but I'd like to review them up front, and that way we can kind of diagnose it and see if it's going to fly or not. If it doesn't, I'm not the type of guy that's going to bring it in here and waste your time. Doesn't do me any good, doesn't do you guys any good to bring it in here and bring these borrowers on a chase that we know is not going to happen up front. So that's the extent of like my background here at EPM. I've got a lot of great programs to discuss and give you some good information, in my opinion. And that's really it at the moment.
Okay, so just kind of give me a rundown. What are your basic requirements? Like, you just kind of ran through a little bit in general, but I mean, what type of borrow should I be bringing to your table?
Okay, so for me, like I like to call us a one-stop shop. So just give you a quick background. So we do conventional, like everybody else, we do conventional. We do USDA. I do FHA 203K. I do the home style reno. I have a VA rehab. I do a ton of VA business. We do manuals. I have a great DPA product, in my opinion. Those are the core of what I do. So pretty much like anything you can think of, and I have some non-QM products too. I'm kind of limited in that arena because we just rolled that out. I don't know, last 4 or 5 months, so to speak.
Okay.
So we're kind of limited there, but we're looking to gain a lot of traction as it comes out, and we get more and more traction on it with our broker community. So have that as well. We do bank statement programs under the non-QM umbrella, so to speak. DSCR is available on that too at the moment. And they're looking at expanding that particular product line, but nothing there tangible as of yet. VA rehab, I've only had like the last 60 or 90 days. And my DPA product's been around for maybe the last 5 or 6 months. I've had a ton of
Okay.
success with it, in particular with folks from Edge.
Okay, great deal, man. So what I want to touch base on and kind of focus on is kind of your FHA product, especially the ones that I'm noticing that you don't have any overlays. And
Right.
yeah, so can you kind of get into that? Because I want to kind of lead into even though I'm in the state of Texas and I'm in Dallas Fort Worth area, I'm also licensed in California.
Okay.
So, I kind of want to touch base on the California HFA. I
Cal
think
Haffa.
yeah, Cal Alpha, that's how you pronounce
Right.
it. Yeah, I'm kind of interested in that because I am licensed in that state as well. So if you can kind of break down your FHA, I mean, what are the guidelines? What are the
Yeah.
advantages of that other than
Okay.
conventional?
Great. So I can break down FHA for you. So think of us as the lower FICO band stop. And in my opinion, everybody can do, 650, pick a number, 650, 680 and above. Everybody can do that, right? It's usually approved eligible findings. Very easy. So we do a lot of these manuals, especially in the FHA and VA arena. Having said that, we'll go down to a 500 score on FHA and VA. Okay. I will put this caveat in there. If you have let's say a 550 score, it returns an approved eligible, go ahead and submit the file. Okay. Because we underwrite to the findings. As you said, there's no overlays. So we underwrite to the findings. However, if you have that same 550 and it returns a refer eligible, feel free to send me over a copy of the credit report and the DU findings. This is our opportunity together to pre-flight it and see if it's going to fit the box or not. Like I said, if it doesn't, I don't want to bring it in here. I don't want to waste your time. It's not fair to you. It's not fair to us.
Hmm.
So let's just say, hey, I'm going to review it. It doesn't work, and here are the reasons why. So you now know this is kind of what I'm looking for. This is the reason this borrower doesn't fit the box at the moment. But if there's an installment loan within the, let's say the last 12 months, and we're at month 10, and 3 months from now, that's the only reason why, you can qualify that borrower down the road. At least you have a game plan. We maybe have to turn it down today, but maybe that's a loan, I don't know, down the road, 60, 90 days from now, whatever it is. And by the same token, if you have an approved eligible, go ahead and submit it. And then most people, if they're comfortable doing a manual, like I don't want you to look at me as an obstacle. So let's say you've done manuals in the past, you're comfortable with a DTI, meeting credit standards, etc. Go ahead and upload the file if you're okay with it. If you're not and you want a second opinion, by all means, take advantage of what I'm offering you. I'm happy to pre-flight these files. I'd rather we do it together. And I give you
Yeah,
a game plan.
I agree with that because yeah, I mean, I'm not about wasting time as well, and
Yeah,
about really for the customer. I'm not trying to lead, hold somebody on the string
exactly.
that's going to break.
Yeah, absolutely. 100%. I mean, it doesn't do you any good, the borrower and the realtor too. I mean, that you're relying on to
Right.
get business.
Yeah, I'm wasting time rather than
Right.
going ahead and getting them. Let's get you to a position where you can qualify. I'd rather use that time on that end versus trying to,
Agreed.
you know, get over all these conditions that they're going to be receiving.
Correct. Yeah.
Yeah. So, so with your FHA, and I know you said this, is it the same requirements for DTI uh as
Great question. I'm glad.
standard?
Great question. I'm glad you asked that. So on an approved eligible, we do these files with, if it's an approved eligible, you can go up to 56.9 DTI in the back end, as long as it returns approved eligible. Okay.
Oh
So
wow.
you may have, yeah, you may have a file, and I've done these. So we go over 56, and I get files actually flipped to me from other lenders because they have an overlay and they can't go over 50, even on approved eligible. So I don't know if you guys run into this or not, but being mindful that we can do it. We underwrite to the findings so long as it's an approved eligible. If you had hypothetical a 620 score FHA and it was a 56 DTI, but you had an approved eligible, we're okay with that, as long as everything checks out and the data is validated. However, if that same borrower was a 620 and they had a 53 or 56 DTI and it was a manual, I couldn't do it because the cap on that is 40 over 50.
Right.
So, and that's another good reason for, like, when you get these manuals and refers, shoot them over to me so I can make sure they meet satisfactory credit guidelines and the DTI is in line. Because if it's a manual, I have to abide by the FHA 4000.1, and there's no exception to the DTI.
Okay. Okay. So what are your minimum and maximum amounts of loan that you can do?
Oh, so we follow the FHA county limits.
FHA
So
county
yeah,
limits? Okay.
we go over that. Yeah.
Okay.
One thing I did want to throw out there too, Will, before I forget, under FHA, we do a non-traditional FICO scores too. So look at me for your no score FHA too. So this is going to happen every now and again where you pull a borrower, there's no credit score at all. And there's maybe, I don't know, 3, 4, 5 trade lines, whatever it is. But for whatever reason, the credit depth won't produce a score. Okay. So you can
Mm-hmm.
send these over to me and I can do these. Okay. 31 over 43 ratios. Those are the maximum ratios. It's a manual underwrite. And again, I can't exceed those ratios because it's set forth by the 4000.1 and we can't insure it if it goes over that. So I have to stay within that box. And we would require 3 non-traditional credit trade lines. One has to be housing, 0 by 30 for the last 12 months. And the other 2, one can be like renter's insurance, car insurance, a utility bill, like a Verizon cell phone bill, like a Comcast cable bill. Those are the ones that come to mind to satisfy those requirements. And
Okay.
you would need reserves too.
Yeah, those are the experience boost type items is what you're kind of covering.
Kind of. So, for instance,
Okay.
if you had a gentleman or a lady borrower who was renting, and you'd get a VOR, and if you couldn't get a VOR, you would call the trade. I'm sorry, you call the credit bureau and have the rental history added as a trade line,
Okay.
and you could do that to satisfy the housing.
Okay. So since we're on trade lines, kind of can you kind of tell me how you guys are looking at student loans?
Uh,
What are you considering on student loans? Is it the standard
it's a
point
standard
five,
guidelines.
point
Standard
five
guidelines.
or one
Yep.
percent?
Yep.
Okay. If there's not a plan in place or
It's
repayment
just,
plan in place.
right. We're
Okay.
underwriting directly to the guidelines, so 4000.1.
Okay. Good deal. Good deal.
Yeah.
All right. So let's jump into this California or Cal Halfa, whatever that is. Can you kind of explain what that is and how that works? And
Yeah. So
because
think
when
of
I'm
it as a
looking
down.
at it, yeah, first time home buyers.
Yeah, think of it as a first-time home buyer for a down payment assistance for California. All right, specific to California only. It's FHA and conventional that we offer for that, and it's, I have one now, and it's, you can do the actual loan. There's DPA assistance for the closing costs and for the down payment. So 3 separate loans is what I'm doing right now. I have a couple of these in the pipeline. I'll be very honest with you. I don't do a lot of those. I do more so of my own DPA product, and it's an FHA product. I can get into that if you'd like.
Yes.
Um, Okay, so you want me to flip the switch and go to that for a second?
Yeah, that's fine. I guess
Okay.
what is called the Empower DPA loan
Correct.
program.
Yeah.
Okay.
It's the EPM Empowered DPA program. It's again underwritten by the FHA guidelines. So give everyone a little bit of background on this. And I've had a ton of success with this personally, and so has the company. And I'll be very honest with you, I've done a lot of these with Edge, and the folks close these within 3 to 4 weeks.
Okay,
So,
great.
and I'm going to tell you why. So the reason for this in large part is twofold. One, the person I'm dealing with at Edge, whether it's the loan officer or processor, both in my opinion are excellent. So they're getting the conditions in a timely fashion and to keep the train moving down the track, so to speak. So everything is like within the timeline. So they get the initial approval. They see, I don't know, whatever the amount of steps is, 10, 15 steps. They send in a bunch of them. They're not piecemealing. So it gets resubbed and goes back into the underwriter. They get an updated approval. And then let's say they whittle it down the last 6 or 7 steps or a handful. They send everything in one shot. It now goes in, and it's basically a 2 or 3 touch file at the maximum. That's a big part of it. The other part of it, and this is very important, this is my own product. So we're not shipping it out to a third party to underwrite it. I'm not shipping it out to order funds. Everything is done in-house. And in fact, we have 3 or 4 underwriters that are dedicated to this particular product, and that's all they do. So they're subject matter experts on this DPA program, and that's what they do. They crank these things out all day, trying to get as clean as an approval as possible. And we provide the DPA amount of 3.5%, which is the nice part. It's an immediately forgivable grant from day one. So there's no recapture on it. The interest rate is 7.75. It's a borrower paid rate only. It's a par rate, and we do allow a seller concession on it.
Okay. So that's 7.75 right now. And you said there's the grant is either 2% or 3.5.
Okay,
And
so
there's
I'm
okay.
sorry. Well, let me interrupt you for 1 second before I forget. So 7.75 is for the 3.5% grant. So we cover the entire amount. If they only need 2%, the rate is a little bit better because the borrower has some investment in the game too. So it's
Okay.
7.25 for a
Okay.
2% grant.
Good deal. Good
Okay.
deal. So I mean, do you have to have any special eligibility requirements to even qualify for this?
You do. So good question. So I'm going to go over the eligibility requirements. So on these files, we require a 620 score or better. Okay. These have to be an approved eligible. I cannot do a manual underwrite on this particular product. It's not allowed. So I just want to be clear on that. I can do it on regular FHA, but on DPA, it's very strict. So 620 score or better has to be an approved eligible. And its maximum DTI is 48.9%. I cannot exceed that. And it's geared towards like your first time home buyers, your civil servants, police officers, firefighters, EMTs, medical personnel, teachers, Sunday school teachers, tutors, retirees, volunteers. Those are the ones that come to mind, the big ones. If they don't fit in any of those boxes, so to speak, then we're looking at the median income and making sure they don't exceed 140% of the county limit. By and large, a ton of people qualify in this.
Okay. So I was going to ask you about AMI, the
Yep.
area
That's the
median
last
income.
factor we look at if they don't meet any of
Okay.
those first few.
Okay. 140% of the AMI.
Yep, that's
Good
correct.
deal. Good deal. Okay. And I guess you kind of went over this already. You're saying once you get all the documentation that you're required to have and that you need, you're looking at a 3 to 4 week closing or sooner.
Do you want me to go through like the whole process? Will
Yeah,
like
yeah, go
now's
ahead.
probably a good time.
Yeah,
So
take
yeah,
us
so
through it,
I'm
man. If you have time, that'll be
absolutely,
great.
absolutely. So what I'd like to do is just give you the life cycle of the loan here, so to speak. Okay.
Okay.
So you now have a file that's ready to go. All right. We've checked the boxes. It's improved eligible. Let's just go perfect world. The loan officer is going to register the file. Okay. They're going to have a unique loan number tagged to that file. From there, they're going to go in. They're going to do their product and pricing step, categorize it as the right product. If they elect to lock it, they can. We don't make you lock it. You can float it. That's entirely up to the loan officer. Okay. From there, they're going to go in, reissue the credit, run DU in my portal. Once that is done, they're going to go in and do the itemization and fees, which essentially prepares the fees for us to send out the LE and our lender disclosures. Once that piece of it is done, they then go into a documents tab and they click on an unassigned folder and they drop the documents there. For instance, purchase contract, income docs, your asset docs, if you have them available, written VOE would come to mind, anything else you would like the underwriter to review. And then once all of those items are completed, we then send the disclosures out. That takes 24 hours. If it's early enough in the same day, like for instance, 10, 11 o'clock, it'll go out that night. Usually anything after like 1 o'clock Eastern is the next day. So that's a disclosure piece. Once the disclosures go out, the borrowers would then e-sign, signifying their intent to proceed. Okay. If it's an FHA file, obviously we don't sign the case number at that point, and then the file goes into underwriting. Current turn time for FHA underwrites are 2 business days. Okay. So now you have a stip sheet with an approval sheet rather, with the amount of conditions. From there, you have to send in 80% of the conditions, just for simple math. If you had 10 conditions, you'd have to send in 8 of them. Or if you sent in the appraisal and title, that's an automatic resub. Okay. So now let's just assume you meet the criteria for a resub. That's 3 business days or a partial review, as it's called. You now get an updated stip sheet. And then let's say if you whittled it down to the last batch, whatever it was, loan officer processor uploads the remaining conditions. Those go back to us, an underwriter for CTC review, which is 24 hours, and then 24 hours for docs.
Okay.
So
Okay.
pretty quick.
Pretty quick. Okay.
Yeah.
And yeah, of course, that all depends on the appraisals.
Yeah,
How
right. It
low
depends
those
on
guys,
how
yeah.
quickly, right. It
Yeah.
depends. I mean, it's honestly, it's a collaborative effort on how quickly you folks can get us the conditions. And obviously, we understand sometimes you could order an appraisal and it could be a week or two that you're just waiting.
Good deal. Good deal. Okay. So, I mean, we touched base on the DPA, California-wide FHA. Anything special in the USDA and VA world coming from you guys?
Yeah, so USDA, I'm starting to do a lot more of this. So we go down to a 580 score. I'm fortunate here, Will, where we have underwriters dedicated to just doing USDA. So
Oh,
they don't
wow.
do FHA, they don't do VA. That's all they do is USDA. So, and we just hired a couple more because we're getting a lot more volume. We go down to a 580 score on USDA. USDA is a little more strict than FHA in terms of credit satisfactory guidelines, et cetera. Again, on those, if you get a refer, feel free to shoot me over your findings, your Gus findings. I'm happy to review them. And if there's something I can't answer, I can bounce it off of a team lead that's a USDA underwriter, and we can get you an answer pretty quickly. Short of that, if you have a Gus accept, again, we'll go ahead and submit the file. So I'm doing a lot of USDA, and I do a ton of VA here too. And we're committed to helping the veterans out as best we can. On VA, it's a nice program too because we don't 500 score, and VA is a little more forgiving than FHA and USDA for credit standards. And we can go up to 50 back end on a refer. I may be able to go up to 55, provided you have residual income, compensating factors, and it has to go for an underwriting manager review.
Okay. Okay, good deal. So the type of properties for all these for most of these programs, I know FHA and the VA, you can do 2 4 unit.
Yeah, so Will,
Okay.
great question. So we underwrite to the FHA guidelines, VA guidelines, et cetera. I did want to mention, I'm glad you brought this up as far as property type is concerned, Will. So we do a lot of manufactured housing too, and we even do single wides as well, as long as
Okay.
it qualifies.
Oh, wow. Okay,
Yeah.
good deal, good deal. So when you're looking at qualifying a person on a multi-unit, right? As far as the rental potential of the other units, what percentage of those of that income can they use to qualify?
They'll go 75% off the appraisal.
Okay. So that's a 1007, right? You're using a
Correct. Yes, the
1007,
proposed rent. Yeah.
the rent schedule.
Rent
Okay.
schedule. Yeah.
Okay. And they can use 75% of the other units.
Mhm.
Now, I have a prospective buyer that's looking to do a multi-unit, but the question is for her is how long do you have to stay in the unit? Let's say she gets a multi-unit, she lives in one for a while. What's the minimum requirement for her to stay, or is it even possible for her to move at all?
It depends on the type of loan. Is it going to be an FHA loan or VA loan or?
Well, let's talk both. So let's say she goes FHA. Uh,
I mean, if she goes FHA, it's a requirement that she occupies the property.
period. There,
Period. Yeah. I
yeah.
mean, otherwise, if her intent is to occupy and then move, I mean, then you have to do an investment. Treat it as an investment.
Okay. Okay. So that's pretty much a new loan, and again, changing that loan from out of FHA to some other type of loan at
Yeah.
that
I mean,
point.
if the intent is that, I mean,
Yeah.
obviously FHA is geared towards occupancy and occupying the property and not investment. So, I mean, if the
Right.
intent is I'm going to be here short term, then it's really should be an investment property at that point.
Okay. So that's when you can, like you said, mentioned before, you got into your DSR,
DSCR. Yeah.
DSCR,
Yeah. That's
and
a good
yeah,
opportunity for
and
that.
other loans.
Yeah.
Okay. Good deal. So I made that sure. And let's just say if I have a veteran buyer who's looking to Well, I guess it'll be the same thing, wouldn't it be?
Oh, well, I'm sorry. One other quick thing on VA. I want to mention this too. We can do no score on VA as well.
You mean they're not
So
required to have a credit score?
no, so if you pull credit and it
Hmm.
doesn't return a score, we can do those. It's like same thing with
Oh,
FHA.
okay. But if
Yep,
the score is there, then of course you have
correct.
to use
Yeah, then we have to
agency.
go by the score. You're right.
Okay.
But I'm just saying, in the instance that you pull it and someone doesn't have trade death or for whatever reason does not return a credit score, don't turn those away because we can do no score VA as well.
Okay. Okay. Good deal. Good deal, Steve. Man, I think I really don't have a lot more questions left. Mm, I do have one quick question. I'm just noticing here on USDA. Is on your USDA, is the I know there's two ways to fund that, right? They could go straight, they could get funded straight from the agency, or another party to get where USDA is a guarantor. Is that how that's working for you guys as well?
Yeah, it's the same thing. So I mean, if we don't have any reports that they don't have the funding for it, so
Okay.
everything should be good there. And then on USDA, I'm sure you know, we can CTC a file, but it has to go to USDA, and they may come back with another condition or two. I just had this happen, so it wasn't anything crazy. We got it resolved quickly, but just because we CTC a file doesn't mean USDA does, right? Especially the first shot.
Okay. So from your experience, I know USDA sometimes they're run out of funding.
Yeah.
Um, what's the, I guess, what's a sweet spot for a person looking to apply and get approved for USDA where they're in a position where they know, okay, this is a good chance they have funding this time of the year.
I mean, honestly, I don't know because we don't control like their agency and what the funding
Okay.
requirements are. So it's difficult for me to answer that. But I mean, here we are in May, and we haven't had any reports that funding's not available.
Okay. Okay.
And if we had notice of it, trust me, they put out a bulletin to all the broker community going, hey, there's an issue with USDA, and brokers were aware for
Okay.
sure.
So there's a notice that goes out.
Oh, absolutely, yeah. Because
Okay.
the last thing we want to do is take something in that we can't do. I mean, it doesn't
Right.
do anybody any good.
Right. And that's where I was going.
Yeah,
Okay. Man, I sure appreciate all your time today, man, for, just, dropping some nuggets on the people and just
sure.
making things a little more clear. And I'm definitely excited about your, being able to go down to a 500 with no overlays. I
Yeah, absolutely.
definitely,
Like I said, if you, especially in the beginning, to get going, just so we can forge a relationship together, and just kind of build a rapport with one another. I mean, don't hesitate. Just call me and just send me an email and say, "Hey, I have a manual. Can you take a look at it? I'm not comfortable with it. Here's the credit and DU. That's all I need, and I can tell you
okay.
quickly if it's going to work or not. And if it's something like, I'm uncertain about, or I say to myself, you know what? Maybe there's a way I can do this. I can run it by somebody here too. I'll get you something quickly.
Okay. Okay. Well, that's all just a 50-50 shot, right?
Yeah, absolutely.
That's it.
But yeah, I mean, you have
Okay.
a shot at it. Whether like I don't know, like people sometimes people shy away from them, or they think there isn't an outlet for them, and so a lot of times there is.
Right, right. And that's where we're trying to convince people and get the knowledge out there so they can understand that, hey, you have a chance just like everybody else. So,
And one thing I did want to mention too, like that's one on this topic, like findings or whatever. So sometimes like people will send me a set of findings and they'll say like approve ineligible or refer ineligible. So I just want to mention this quickly. So an approve ineligible, a lot of times I see this where someone's not noting the correct funds to close. And then once that gets fixed and DU gets rerun, it usually spins an approve eligible. So I'll throw that out there. And then a lot of times I'll see a refer ineligible. And the reason for this is because FHA requires a 580 or better to get max financing. 579 and below is 10% down. So sometimes brokers will run a file and it's a 560 refer and they're doing it at full financing. They'll come back and refer ineligible. So that's the first thing
right,
I look
right,
at, and they'll be like, well, they got to put 10% down. And sometimes it might come back and approve eligible, not all the time, but
right.
sometimes it does.
Yeah, and that'll be on your mortgage loan originators for us to make sure that we're paying attention to details
Yeah, and
when
trust
it
me,
comes
I'm
to
I'm
that.
here to review it, but I'm just like pointing out something like if you come across this, maybe just take a quick look and say, hey, you know what, this might be quickly resolved. If I can get this to spin, prove eligible, if we correct something.
Right, right. So
Yeah.
with the 10% down, if I can recall, the 10% or better, or is it 11% or better or is it 20% where we're not looking at mortgage insurance premium?
Yeah, that's for its conventional, 20% lower or
Okay,
less. Yep.
okay.
Yep.
Good deal. And FHA is going, mortgage insurance is going to be there for the life of the loan, regardless,
Yeah, we're going to
correct?
follow all FHA 4000.1 guides. Yep.
There you go. All right, we have it. Steve, again, thank you for your time this morning, man. I sure appreciate it.
Well, I got to tell you, I like this format like a lot better. Like what you said in the beginning, like you want to do this organically. This really worked. I liked it.
Yeah, I appreciate it, man. I'm going to send you the final cut.
Okay.
Once I go in post production, I'm going to post it on YouTube, and you can kind of see why I like the I do like Zoom. That can never go wrong with Zoom, but the other format that the platform that I'm using, it really looks great, man. It looks like I'm at CNN or something. We're doing a news
Wow.
production. Yeah,
Wow.
great stuff.
Fantastic.
So I appreciate you again, brother, and hopefully I'll be in touch and be shooting you a few loans here
Yeah,
in the near
likewise. I
future.
appreciate taking a few moments out of your day for me. I really enjoyed the format here and the opportunity to get to know you a little bit better. And I appreciate everything you've done and sending the invite out. So like I said, taking some time out of your day, and look forward to doing some business together with you.
Thanks a lot, man, and you take care. I appreciate
You
it.
too. You
All
too.
right.
Thanks a lot.
Have a good morning.
You too. Take care. Bye.
Bye.